Whether you invest in the stock market or not, this video will be useful to you because the new world economic order that is coming will affect us all, as the famous investor Ray Dalio has already warned. This new order is probably one of the biggest economic and social reforms of the last decades and will have serious implications for both the stock market and the economy. The world's largest investor Ray Dalio has warned that this new scenario could cause a major crisis in the US and also in the rest of the world. In this video I will explain what it is, how this new world economic order will affect you. We will also see how you can protect your savings and your investments with the recommendations given by Ray Dalio, and I will illustrate with 3 examples of investment opportunities that would behave in a positive way in this new scenario. And if you want to watch the video, I just ask you to like, subscribe to the channel if you have not already done so, and share this video on your social networks. Above all, with a friend who is as eager to prosper as you. Are you ready? Come on. Maybe you do not know the name Ray Dalio, but starting from scratch has become one of the largest investment fund managers through Bridgewater Company, where he manages $100 billion and is commonly described as the Steve Jobs of the financial markets for the high reliability of their predictions about the future of the economy or the stock market. He is also a renowned author and lecturer who has participated in some of the most important events, such as the Davos World Economic Forum, which brings together the richest and most powerful people globally. In a recent interview, he has stated the following about this new economic order that is coming. What I found is that there is a cycle, a great cycle. They started a new world order in 1945 after the Second World War. It was decided how the world would be divided. They created the dollar as a world reserve, and so on. After so many fights, a dominant power was established, which has given rise to a period of peace and prosperity, but this is about to change. In addition, Ray Dalio has warned that the political extremism that has recently occurred in the US will only accelerate this process towards this new world economic order. To support his arguments, Ray Dalio shared a very revealing graph that I will show you below, where he explains why the US is entering a terrible economic recession and could also affect the rest of the world. This would have serious implications on all kinds of investment, whether real estate, stock market, commodities or currencies. Through the study of history, Ray Dalio has discovered that every dominant economy, as the US has been for the last 70 years, has 2 clear phases of economic upswing and downturn, and that each of these phases is clearly marked by a series of economic events that help us define where we are now. In this graph shared by Ray Dalio, we can see how the US is already entering this phase of decline, which is mainly characterized by a high level of debt in the system and by the printing of money in alarming amounts, which leads to economic and social inequality, while on the opposite side would be China, which is still in the upward phase characterized by the creation of wealth and by the accumulation of debt. Ray Dalio also warns that this money printing tends to affect the middle and lower classes more severely because they lack savings or financial investments to protect them from this new inflationary environment. During the last 13 years since the famous financial crisis of 2008 began, record amounts of money have been printed by the US Federal Reserve. As you can see in the following graph of the US Federal Reserve's balance sheet, it has gone from $1 trillion to more than $7 trillion, a growth much higher than that of the economy in general. This new economic experiment is already having its first consequences on the real economy, as we are seeing levels of inflation not seen for decades, and we are experiencing significant increases in the price of commodities or goods and services. I want to remind you that later in this video I will show you the risk that Ray Dalio is most concerned about today, as it could have severe economic consequences. During this crisis, we have come to see what many considered an economic joke. The famous helicopter money theory, by which many economists claim that to stimulate the economy after an economic recession it would be a good idea to print huge amounts of new banknotes, load them in a helicopter, and throw them to the people so that they would go out to consume en masse and thus reactivate the economy. Well, during the year 2020 the government launched this famous helicopter of money and began to send to all American citizens the famous checks of $1,200 so that they went out to consume and spend. But as Ray Dalio explains, if the solution to any economic problem was to print large amounts of money and give it away to citizens, countries like Zimbabwe would be the richest in the world, since they are experts in printing huge amounts of new money. This economic recipe has always led to the ruin of those countries that have tried it, such as Germany, Argentina, or Venezuela. Another problem cited by Ray Dalio is that we are reaching an extreme level of economic inequality and discontent in the US is very high, since for example only 3 individuals such as Warren Buffett, Jeff Bezos or Elon Musk accumulate more wealth than the poorest 50% of the American population, and we are talking about 190 million people. In fact, in the following graph you can see how the richest 1% of the American economy has not stopped prospering during the last 40 years and accumulates more and more wealth. According to Ray Dalio, historically this social inequality always leads to 3 serious economic problems that will affect our savings and investments. First, taxes will rise both in the US and in the rest of the world, and we are already seeing this with the proposals made by Joe Biden. This has a very negative effect on the stock market since it decreases the profits of companies, and as the share price reflects the evolution of these profits, they would have a negative behavior. Secondly, economic conditions are going to worsen according to Ray Dalio. In fact, the Federal Reserve has already warned recently that interest rates will rise in the future, which would have a very negative effect, especially on companies that are highly indebted. And the third consequence would be an increase in new regulations and measures to redistribute wealth, which would have a negative effect on almost any kind of investment. You are probably wondering what we small savers or investors can do to protect our portfolio in this kind of economic environment. The worst idea you could have is to sell everything and get liquidity, because in an inflation scenario, the value of money is going to go down and down, so we have to be heavily invested, but in the right investments. If we look at Ray Dalio's portfolio, he has a very interesting investment philosophy, which can do well in almost any economic environment, which I will explain below. First of all, Ray Dalio has recommended having at least 40% of our investment portfolio in equities, since they tend to do well in this new economic scenario. The big question is what kind of investments or sectors are going to do well in this new scenario. Before answering this question, I want to remind you that if you are liking this video, you can subscribe to the channel by activating notifications so that this community that we are formed between all of us has the widest possible dissemination and more people can learn to invest or manage their savings. Fortunately, thanks to a recent study by Bank of America that covers the last 50 years of the stock market, we can give an answer to which investments are going to behave better in this new scenario. In this table, which may seem a bit complex at first, we have to look at the 5th column, which is the economic scenario that Ray Dalio proposes for the future, since we are currently starting from an inflation that has been historically low and is expected to rise in the future. We can see that the best sector in this scenario is by far the energy sector, followed by commodities. For this reason, the first stock I want to talk about is Canadian Natural Resources, which is one of the largest oil and energy producers in Canada, listed on the US Stock Exchange under the CNQ ticket at a price of $32 per share. This company produces more than 1 million barrels of oil per day, high-quality land, and with low extraction costs, which are key to succeed in this sector. Over the last 5 years, this stock has had a sideways performance in the stock market because it has been an unfashionable sector and because we have experienced low inflation, which has resulted in a valuation today. This company also has an excellent track record of treating shareholders well, as it has increased its dividend over the last 20 years in the stock market, including the financial crisis of 2008. These shares are currently trading at a valuation of only 4 times EV/EBITDA, which is the ratio used to value companies in the energy sector. The historical average for this sector is usually around 6 times, which would put the value of the company at around $50 per share, and it is currently trading for only $32. It must be said that there could be an additional upside if the scenario proposed by Ray Dalio materializes, given that the increase in inflation would increase the company's profits and also the multiples that people will be willing to pay for this new sector, which would raise the intrinsic value of the company to over $100 per share. Ray Dalio states that if this new world order materializes, gold is an investment that will always perform well, which is why he recommends having at least 10% of our portfolio in gold or gold-related investments. Ray Dalio recently stated the following about gold and this new world economic order. Money printing always decreases the value of bonds and transfers wealth into financial assets. Historically, this has always driven up the price of gold and stocks. In fact, since March 2020, when the government started printing massive amounts of money, gold has risen from $1,500 to $1,800. There are mainly 2 ways to invest in gold. The first and simplest is to buy a gold ETF that reflects the behavior of this metal going forward. The world's largest gold ETF is publicly traded under the GLD ticket at a price of $169 per share. Over the last 5 years since this money creation process was accelerated, it has also had an excellent performance of what has been realized is $111. In Europe it is sometimes not possible to buy American gold ETFs, but there are European versions, in particular issuers, which trades under the ticker EGLN at a price of €30 per share. The second option is to invest in gold mining companies, but this option is much more complex because not only do we have to guess the price of gold, but they are complicated businesses at the operational level, and there are always unpleasant surprises, such as floods, collapses or strikes. The positive side is that if they perform well and the price of gold goes up, these investments will go up much more than the price of gold in the stock market. A good way to reduce the operational risk at the individual gold mining company level is to invest in a pool of these companies, again represented by a gold mining ETF. The largest of these ETFs representing gold mining companies is listed in the US under the GDX ticket and is called VanEck Gold Miners and trades at a current price of $34 per share. Before going on to see the biggest risk that Ray Dalio is most concerned about, I want to remind you that everything we see on the channel is educational and that my main objective is that you learn to invest, but by yourselves. In this way I want you to be responsible for your decisions to buy or sell. During this interview Ray Dalio revealed the biggest risk that worries him the most today, and that is that we investors have to watch out for the future, and in particular he said the following. After studying more than 50 conflicts and revolutions, it is very obvious that the single most important leading indicator of wars and revolutions is the bankruptcy of governments after economic shocks, where there have been large amounts of economic inequalities and class differences. Ray Dalio tries to warn us that this risk is not immediate, but if the economy continues in its current direction, we would reach a tipping point where the consequences could be severe. One stock that would do well in this new scenario, for example, would be stocks that manufacture personal defense products such as Sturm Ruger shares, which trades in the US under the RGR ticket at a price of $75 per share. Since this change in this level of social inequality began in 2008, the shares of this company have risen from $6 to more than $75 due to the high demand for its products. These shares also have a very attractive valuation of only 11 times this year's profits. If they were trading at their historical average, which is around 16 times, it would mean a potential revaluation of more than 40%. But what would be interesting would be if the scenario proposed by Ray Dalio materializes. In that scenario, they would have a much higher potential and several times their current price. I also want to tell you that if the video is well supported, I will make a video analyzing the entire investment portfolio of Ray Dalio. I hope this video is useful and that you have learned how one of the best global investors invests. If you liked it, let me know in the comments, and I will continue creating similar content in future videos.